Hi all, and thanks so much for tuning in to the trade setup on Bloomberg Quint. I'm Niraj Shah, and it promises to be a big day simply because of the clutch of global events that have happened already. Jerome Powell spoke and post his speech, yields shot up. There is also this non-farm payrolls data, which might actually trigger a bit of a movement there too, if not already. And then, of course, oil played its part as well. So lots happened. Just very quickly to the first big news, which was what the yields have done, and this is of course what the US markets did, and came off very very rapidly in the session yesterday. And mind you, one part reason of this is also what Jerome Powell said and what the market probably expected him to say. Now, in its wisdom, certain quarters of the market believe that Jerome Powell could reiterate some bit of change of stance if there is warranted because of the rising inflation. Powell stuck to his previous comments, essentially reiterated what he had to say, what he has said all this while, which is not bad, by the way, but maybe the market expects him to do something more, as a result of which yields went up above the 1.5 mark yet again, 1.56 as we speak. So therefore, yields moved up, and that led to a bit of a corrective move in the markets. Now, the US futures, the last time I saw, were still trading flat, and as a result of which, both Asia as well as the SGX Nifty are showing deep gashes in the session today. ASX, where our guest would be sitting from, or KOSPI or HSI, name any market in the Asian region, and it's trading with a fair degree of red. And you would see the SGX Nifty having deep gashes as well in the session today. There is no doubt about that. The only point is, can it recover? Somehow, it may or may not be the case. And I'll get to the Indian trade setup in a bit. The other very big important news is what happened to oil. And remember, for 2 days, I've been speaking about this, the OPEC meet and its importance. Let's get in Peter McGuire, who's consented to join us this morning to talk about his thoughts on what he made of the OPEC commentary and what kind of repercussions does this have on oil, which has already rallied quite a bit from its lows. Peter, so good having you. Thanks so much for joining in. Did the decision catch you by surprise as well? And therefore, what's your belief of what happens to the commodity in the near term to the medium term?
Well, good morning, Niraj. Yes, it did surprise me a little bit. And if I go into price first, we're up the best part of nearly 9% in the last 2.5 days, which is just extraordinary move to the upside. So, that Brent and WTI really, ratcheting forward. Brent's got the capacity sometime maybe to hit a 70, and certainly WTI 65, 66. So there's from a price point perspective. OPEC Plus, they shocked the squeeze. The alliance rolls over, output cuts, and we're looking as far as April with minor exceptions. So Saudi Arabia is the big moving beast, and they're going to maintain their 1 million barrel per day unilateral cut, decide later on gradual phase outs, Niraj. So that's the overarching statement.
Peter, I would love to have your wisdom on what do you think happens in the slightly medium term, because a barrage of opinion comes in which says that a lot of this is supply side led issues, maybe because of the natural events in US as well as OPEC's decision. And once these ease, crude will come off. Now, one, do you agree with this assessment? And even if you do, is it possible to, for lack of a better word, time when all of this could happen?
If we put our mind back to the November 3 election, and really crude started to rocket as soon as we got that announcement as far as Biden being the successful president-elect, crude prices are up the best part of 55% and nearly 60% since then, the latter part of October. So there's the first part. Will they come back? Yes, it's always cyclical. We've just been through an horrendous winter period and COVID and all of that with the Texas situation and crimping as far as supply over in the States. So the OPEC storyline, I don't think changes. The world's awash with oil. No one can tell me that we're running out of oil. The second part is the take up, and this seems to be very, very much China's numbers as far as GDP this year, far greater than what we experienced in 2020. So they've just come out with a 6.5 handle. And naturally, India coming back online, those big consumption numbers. So I feel as though, yes, we will take a little bit of a downdraft out of crude, maybe in around about April or May.
Okay. And Peter, one last question. What's your assessment for the rest of the year? Is it even possible to figure out what range could crude trade in for the rest of the year? Would it be inflationary? or would it come off?
Well, there's the point. I want to see what's happening. We've seen that US yield 10-year really get whacked to the upside. So what's happening as far as US dollar? You know the market's better than anyone, Niraj. We're nearly at 92 handle for that US dollar index. Only a week and a half ago, we were at the best part of 89.5. So it's had a big push up to the upside. What happens with bond rates? What happens as far as US dollar? And where do equities go? So I got 10 months to forecast that. I know one thing, it's going to be volatile. And they're the big swinging movement pieces in the whole chess game. Where does US dollar trade? Where do equities trade? And what happens with bond yields and inflation? So I think it's going to be a wild year for traders.
Okay, Peter. Well, I hear Sydney's lovely at this time of the year, as you said. So we hope that your day is better than how the markets are projecting. But thank you so much for speaking to us.
Thank you, Niraj.